Welcome back, family, to day 4. Sorry about that. I just ate. Um, we're looking at NQ for the day and what NQ did. Man, today was a great trading day. As I told you guys, we were trying to look for this buy side liquidity to be targeted. And or we were looking for them to rebalance a portion of the weekly range. So the week opened up here this Monday, and the imbalances that were left was this candle on Thursday. We had from the closing price to this order blocks high right here. We had that open as an imbalance, and so it was very likely for us to see them rebalance that. And then, of course, they also offered some good positions on the long side. Today was a very, very good day to tape read. If you guys were tape reading today, today was a phenomenal day to tape read. It was one of those days where if you really wanted to get algorithmic and look for things in price, it was one of those days where it was fun to watch for sure. I'll say that to the least. So here again, you guys, as you guys know, we stayed inside of this daily fair value gap. We've been talking about this all week. So if you don't know where we're at and what we were trying to reach for previously, or what was I was trying to see, then of course you can always go back. But we have the daily fair value gap here, and we had this bullish run here on Thursday, which was yesterday, and today, which again I said either we take this buy side liquidity or we play back inside into the weekly range to rebalance something, and that's exactly what we did. So there's not really much to see here, but the fact that this was the last area where sell side existed at this blue line, because it was only buy side here, and then we needed sell side to rebalance this. Okay, so that's just the understanding that we have there. So now let's go down to the 4 hour. 4 hour was beautiful for making this a lot more clear. So I was looking at this, right, and I'm like, all right, the imbalance exists from this candle's high all the way to this up close candle here, the close of this up close candle. We print all these bearish candles, and so from this morning, the only area at the start of, let me see if I can put this down. So this right here, I have it in New York Times, so you guys won't get confused. So this right here at 6 a.m. from this candle's opening price. So if you came into the market around like 7 o'clock, or actually not 7 o'clock, if you came to the market at 10 a.m., you would have seen from this candle's open and below, we still have a lot of buy side delivery and no sell side delivery. So this was calling for shorter prices, and then what we did from here was just beyond our expectations. And obviously, since we're bullish, we're obviously going to be geared towards a bullish run, but we didn't have any expectations for this to happen, but it did, and it was good to watch. So I just wanted to see how they reacted at this level, and they gave us that today during the AM session. One thing I want to point out is here that something I mentioned, this fair value gap here for me was supposed to stay open and is considered a breakaway gap. I said that in yesterday's video, and them coming into it here is just a function of a fair value gap. You guys shouldn't be worried and say like, oh, this is not a bag anymore. No, it is, because there's still an open gap left inside this fair value gap. So we broke away from that gap, and this also speaks strength, because it's telling us, hey, we don't want to fill in that fair value gap at all. We just want to punch into it because we have to, because we're algorithmic and we know how fair value gaps work, and we just want to go higher. That's what we want to do. So with that being said, that was the idea. And then I had this fair value gap here, a fair value gap at a high. That forms at a high is a place of reaccumulation. So we'll go here to the fair value gap. And so this is the 4 hour fair value gap. And so the fact that we close above this fair value gap, like body wise, says a lot. And the wicks are large, but we stay above these as bodies. As far as volume, we're staying above this fair value gap here, so it's a good thing to see. Keep in mind we took this here. We've been running higher ever since. Breakaway gap and fair value gap. Cool. So going now to the H1 or the 1 hour, and then the 1 hour we have this, right? So that's the thing, right? This morning was good for some and bad for others. This morning, one of the things that allowed me to be successful this morning, by the way, guys, today we took 1L and we took 3 trades. I'm very happy about keeping my rules. I was extremely patient today. I applied what I know very well. And all I know is that the last trade that I took was not necessary, but I felt like I was in that flow state. And for me, I feel like I kind of disregarded the fact that I already was successful with 2 trades and I got enough, because I was like, yo, I'm in flow state. Might as well just continue. You know what I mean? And so in that same coin, I allowed myself to trade again, which honestly, that is what took down my performance. So if that didn't happen at their trade, I would consider today's performance a plus. But since that happened, I'd probably say we'd be at an A- for that. But I'm still extremely happy and proud of myself. Not to be so hard on myself. I'm extremely happy about being extremely patient this morning. And one of the things that's been helping to dictate that has been the opening prices. The opening prices, I was able to illustrate something in my mind. It came up as an idea today, as an analogy. Opening prices serve as parameters, of course, to filtering if the session is going to offer high probability setups. And not only that, it's also a filter to see like if price is really truly bullish or truly bearish. And if it doesn't show its hand at the opening prices, then it's also telling you something else. It's telling you that it's not willing to leave that opening price, that level. So you also have to take that with a grain of salt, because as we saw yesterday, 10 a.m. acted as a quick, I think I told you guys, hey Jack, quickly I go to my friend Jack, I shake his hand, and I was like, yo, bro, I love you, bro. Yo, I hope you're doing well, man, but I really gotta go. Like, I gotta go somewhere. And that's exactly what happened yesterday with 10 a.m.'s opening price. And there's something to be said about the opening prices, and that is that NASDAQ has a tendency to, if it wants to leave that level, it will show you its hands. If it wants to stay, remember how I mentioned yesterday that it's like a man who's trying to flirt with a girl at a bar. He's trying to stay in that conversation for as long as he can. And that's what NASDAQ tends to do. And so if you guys can take that principle and apply it to the opening prices, you guys would understand what I mean. So here we have the we had this fair value gap up here. Actually, why am I even using this? We had this fair value gap up here. I was actually wanting them to see them take price up here. But of course we closed inside of this range, and I think they're going to leave this obviously now for next week. And it's not that I think I know, because it didn't get hit this week. So yeah, what the heck? Why am I putting that right there? So yeah, so we have this fair value gap up here. We have, of course, the buy side taking today, and then it tanked back inside the range, and it stayed inside the range here. Inside of here we have this rejection block here, and we also had a high probability failure swing here. So this right here is internal sell side liquidity. I'm just going to keep this as sell side liquidity, and then that's our rejection block. So I can put here RBJ or RJB. That's a rejection block. So those are some of the things that we saw today, and they came into this fair value gap here. Let's go now to the 5 minute. 5 minute, if you guys can see, they come all the way down to 1 standard deviation of overnight session below, and they fill this entire fair value gap. They pierce a little bit under to the breakaway gap, and then they run higher. and they leave, of course, these this buy side liquidity here, these highs right here, they leave them open, and they also leave a fair value gap here. So we're gonna go through what I was looking at through the M1, and I just want to show you guys pretty much how 10 a.m. works and what setups I took today. And now that we can get the brinks, now that we can get to the bottom of everything, here was nothing. So as we opened up, we were up here. We took out overnight session high, and then obviously sell side liquidity, so buy side liquidity, sell side liquidity. They did that today, although they didn't do that yesterday. If we go to the 10 a.m. opening price, we were stuck here. And I can put here just 10 a.m. opening. Or let me just say open. 10 a.m. open, right? And this is where a lot of traders got messed up. A lot of traders got messed up, but this right here is going to show you guys a lot, or is going to tell you guys a lot about price. Whenever you see that they're just pouncing around this price level like this, it's them wanting to keep price there. I was telling my friends today that we trade together. Well, we don't trade together necessarily, but we like to share our opinions on the market. You know, you always have a friend like that. But I have, of course, a couple brothers that I always do that with. And I was telling them, I was like, yo, you ever been in such a good conversation in your life that you know that you have to go or that you have to be somewhere, but your friend then says another statement or another sentence, and then that comes into a whole nother conversation all over again, and now you guys are having this conversation for the longest time. Well, when NASDAQ decides to not leave 10 a.m. opening price or at the 8:30 price or any sort of opening price level that you have as far as a time level, and you see them staying in that price, that 10 a.m. opening price right there. This is the opening price for this bearish candle. When you see them stay stuck here and not really show willingness to leave out of here, then that is them trying to have a seek and destroy profile for quite some bit. And you guys are going to be like, but today wasn't seek and destroy. Well, we had some aspects of it for sure. And the same way that I could treat a session, a whole daily profile could be a seek and destroy, there could be hourly candles that offer a seek and destroy, profile around it. It doesn't just limit itself to the session. Remember, time is fractal. So this is 10 a.m. and then all the way to 11, we kind of have that seek and destroy profile for the majority of the time. And if you were paying attention to this, right, because we have a bullish order block, a propulsion block here, and a fair value gap. This right here, of them staying above this order block, was good. But once I was waiting for them to reach down to this 10 a.m. opening price. Once they actually did, though, I was waiting for this candle to close to show me if it was really going to be bullish, because at the end of the day, I wanted to see these fair value gap up here being reached to. This right here is a low resistance liquidity run for me. So I wanted to see that, right? And then also I was hoping that they would take, possibly even go higher into here, into 2 standard deviations above, which is also the buy side liquidity here. So this was going to be beautiful. I was like, yo, this also lines up. So like, I wanted to see this go higher. And we're bullish anyways, because again, interest rates suggest that we do. So that's fundamental speaking to us. Right here, they took it with this candle here. They came down to the 10 a.m. opening price, and they did not reject, like they didn't give us a bullish rejection off this level. And we closed on top of it, and I was like, all right, this is cool, whatever. I'm just going to have this sell side liquidity here drawn out, and we did. And I was expecting these candles to be here, and I was like, all right, I want to see them close above the 10 a.m. opening price and show me that this is going to leave. And so they didn't do that here. They came back down. Then they took out this as a sell side liquidity point. So I was like, all right, we have another opportunity to go long again, possibly, to look for an opportunity to go long, because sell side liquidity was taken once again. I'm sorry, I put liquidity taken. So we have sell side liquidity being taken again. So all right, let's see if this time they want to take it higher. I didn't enter in any of these candles. I wasn't part of any of this. And then I saw this. This for me was going to be a breakaway gap. So I was anticipating for that to stay as open as a breakaway gap. And then I was also anticipating them to leave this price here at 10 a.m. Leave. Oh, hey, 10 a.m. I love you. You're my friend. I want to talk to you, but I have somewhere to go. Instead, here at 10 a.m., he was like, yo, Jack, what's up, bro? They had a conversation that lasted literally an hour, and they wanted to stay there. So opening prices to me are like you trying to have you at a place having a conversation with a friend. Obviously, if this was supposed to go anywhere, it would have been a quick reach to it and then been gone. Same thing when we came down here. They would have reached for it and it would have been gone. If you guys want to see an example of that, let's look at yesterday's price action real quick. And let's just look at where 10 a.m. is at. And then you're going to see what I mean. So automatically I can tell that 10 a.m. is somewhere. Yep, here. So you see this price level right here? 10 a.m.'s opening price right there. Once 10 a.m. opening price came, we literally were like, yo, what's up, bro? I really got to go, man. Yo, I love you, bro. I'll talk to you soon, but I really got to go. They tapped it, gone. Right? They're not staying here. They're not playing here. They're not trying to stay and have a long conversation. The bodies are very far from the opening price. And the opening price is the place where they're having conversations. This was a very short conversation. He just wanted to say, what's up? Yo, I'm going to see you, bro. I got to go. Versus here, look at this. Look at this. Look at this here for today, right? That's 10 a.m. opening price. That does not look like anything from yesterday. And so, yes, we have this fair value gap here as a bearish fair value gap. One of the things I don't even like about this fair value gap is that they filled it in. They're wicking around all around this. They're not giving us a real push anywhere. And so I waited through all of this because all price was doing is sticking to that 10 a.m. opening price, and it wasn't going anywhere. And then eventually we leave the range, and now there's an opportunity for me to go short. And I was like, all right, now I know that they're going to take it short. We have left this range, and we're leaving now fair value gap behind. And so here, I wanted to see them actually run into this and go lower. Because this right here would not be considered a breakaway gap, simply just because, for me though, this is just me specifically, some people would consider this because, oh, it's the first fair value gap right after consolidation. I get you on that, but also this is just sell side, and we need buy side delivered here. And that will make sense for later on and why the buy side run was needed as well. So then we came down to the breakaway gap. Then they're finally showing their hands. They didn't offer this. Then they offered this order block here at this low. They came down. Great. Everything's cool now. Now we have sell side and buy side. This for me was going to be a breakaway gap. Automatically I knew, well, we have both sides there. We're just passing through. And then once we took this high right here, which is a market structure shift here, I was waiting for them to create a new fair value gap. And this fair value gap would be the one that they would use to take price higher. And this would be the breakaway gap. All right. And I still didn't enter here because, again, we had all this fidgeting around. And I was like, I really need them to show me that this is a bullish, short-term trend right now. And so then they did this. And this was my first entry for the day. we had here buy side liquidity, and this right here is all sell side and buy side. So we've already offered both sides of delivery in this range here, and they're staying above consequent encouragement. They leave a little gap open. That's good signs. They run it higher here. Remember how I told you that there's order blocks to avoid and order blocks to actually be comfortable taking? So this here, you have to look for maybe a series of candles, a candle with the most bulk of volume. So here, the one that I chose for me, personally, I chose this candle here as my order block because, yes, all these are series of candles, but this one has the most volume inside of it. It's a big body. So I chose this opening price here. And look what they did. Before, this is the buy side liquidity. Before taking out the buy side liquidity, they pause right there and they return right to the order block. And then they run higher. Remember what I told you about avoiding which order blocks to avoid, which we'll get to later? If liquidity was taken here first and then they came down here, that would have caused issues and probably would have needed a sell side run to be taking place if they wanted to continue higher. But instead, they stop right here, come right back to this order block. This was my first entry. And then we ran into the fair value gap, or the SIBI, sell side imbalance buy side inefficiency. And then we also had this buy side liquidity here. Buy side liquidity, or any time that liquidity is taken, it promotes for a reversal in price, a possible potential reversal in price. I knew that this was going to stay open. Breakaway gap, we're trading through a consolidation. This is what a breakaway gap looks like. I'm starting to also realize, for me specifically, when a breakaway gap and a fair value gap exist in the same coin, that creates high probability continuation moves. So that's helping me determine what setups and entries are high probability or not. This right here, we're trading through this range. I knew this was going to stay open. I just know that they needed to trade back to this order block, and I traded that. It was algorithmic for them to do that. They came back down. They ran it higher to the buy side liquidity, or the SIBI here. And then same thing happens here. We have this as the short-term liquidity, and before we even go to take the liquidity, we pause right here. We come back down into 50% of this fair value gap here. So let me just clear this out, and let me just take this one here. Remember, when there's a volume imbalance in the next candle that would form the fair value gap, you have to go all the way to the body. And here, they're staying above consequent encouragement. They fill this in, but they leave this order block right here. They pause right here before taking the liquidity, and they return to the order block and consequent encouragement. I entered here. And then my target for this trade was the... for this trade right here, there was a 5 minute, I think I was on the 5 minute, let me see. Yeah, remember, so this was my target here. The buy side liquidity right there. If I go back to the 1 minute, they went higher here, and then I took my profit right here, just because we were getting close to the lunch hour. Also, they started respecting this consequent encouragement here with this bearish order block here. So that was another thing for me at the time as well. I was looking at this like, oh, they're going to reach into this, and I want to see them break through this. But the fact that they were playing around here allowed me to close it here, and I didn't want to see anything else. Then comes 12 a.m. right here. And this is where I took the other long, and I got taken out. I thought this would be a breakaway gap. We took out sell side liquidity. We're trading inside a range that's efficient. Buy side, sell side, buy side, sell side, buy side. Again, this is just price passing through. But unfortunately, I'm starting to realize that when it's like lunch hour, depending on the time of price and all that stuff, price reduces its probability by a lot just by the way it's performing. Because here, we're leaving this breakaway gap here. We're staying above 50%. This shows strong bullish signatures versus these that this is supposed to be a breakaway gap. We're trading inside of the range, but we still trade into it. And that right there was a big red flag. Us not being able to break above these highs, knowing that we have all these highs here. This is overnight session equilibrium as well. And the 4 a.m. opening price, I wanted to see them take that all the way up there. And I wasn't trying to trade anymore because that was my third trade for the day. And I know that the buy side liquidity was still up here as well. So I'm very proud of the fact that I was able to withstand all of this just because of looking at the probability with 10 a.m. opening price. And then when we had this, I know that price was willing to go higher, especially since we left this liquidity here behind. And then they came to overnight session equilibrium. They tanked a little bit. They come back down to whatever price level this is here. Not sure. Oh, this is the rejection block here. Yep. Come back down here, and then they're finding resistance here. Then at the afternoon, I saw this fair value gap. I wanted to enter again. I maxed out on the amount of trades I can take for the day, which I'm very proud about. I was able to tell myself no, although there was still an opportunity. I was able to tell myself nope. I'm trying to build consistency here. I don't care about the money. I care about building consistency. On Monday, I will be going for a combine. I think this is granting the opportunity to get one because for the next 2 weeks, as I said in the previous video, we should have some nice price action, especially volatility. We should have volatility in the marketplace. So we should see some exaggerated price runs, and there's definitely an opportunity for us to be in those. Here we have this fair value gap here. I love how once we get out of this here, out of this range, right, we're back above 10 a.m. opening price. Look how price is respecting 10 a.m. Here, we're leaving 10 a.m. Here, we come back down to 10 a.m. 10 a.m. again. Go back to overnight session. So they're playing around overnight session equilibrium, and they're also playing around 10 a.m. opening price. Overnight session doesn't work. Well, look at that, Dumbo. Look at the overnight session equilibrium. It's doing something, isn't it? Stopping price like a brick wall. Same thing with 10 a.m. It's doing the same thing here. And we have all this price action just inside of here. So this, again, it's like them wanting to have a conversation and stay in that conversation. It's going to be a long-winded conversation because they're not leaving this price level. They're not leaving. Here, you probably could have made up the excuse that they wanted to take this a lot higher. But when they get to overnight session equilibrium, then they start failing again. When we leave here of 10 a.m. again, I'm like, oh yeah. Then they leave this SIBI behind. Respect the consequent encouragement of this fair value gap and scream it lower. This was a perfect opportunity to be short here. You would have seen this candle come down. The next one here, you could have entered, and then potentially, of course, this one. When this candle happens here, automatically all probability is reduced because if we're trading respectively how the algorithm books price, this right here is not normal. And there's no reason for them to take it because they reached to consequent encouragement. We should leave price now. We should leave outside of this range. If they really wanted to go lower, they could have. But instead, no. They take this candle. This candle opens at 212, goes higher. Whenever this happens here in the marketplace where you see something like this going on, what's happening here? What's the context? Well, this is how I internalize this context. ICT may have a different way of looking at it, but this is just me personally. I challenge you guys to just look at the candles that sporadically have all these down moves here, and then these large ones just come out of nowhere, boom, and come back to this fair value gap here. Look at what happens to price after. This candle right here is the start of the time distortion. So right here, this candle started the time distortion function. And if you guys can see the price action inside of this candle's body range, look how everything is just going back and forth, back and forth, back and forth, back and forth, back and forth. This is not normal. This right here reduces probability by a lot. They reach for the sell side liquidity, and then we break out of this range. We break out. Again, buy side, sell side, buy side, sell side, buy side, sell side. We have both sides of delivery here. This right here is just price passing through. This right there is going to be a breakaway gap by nature. I was looking for them to come back into here. So since this is a second fair value gap, the fair value gap that forms at a high, and there is buy side liquidity left here in the marketplace, I was looking for them to potentially trade back into this fair value gap here and then continue. 10 a.m. opening price was here on the market, still there. They want to continue to have conversations at 10 a.m. And then we left another gap here. And then came this one, and I was like, all right, this one is more feasible for them to reach into. Fine. This one is the fair value gap. I said to my friends, I was like, if they fail to go above 10 a.m. opening price, it's possible that we can see them go into this one here. But they just decided to reject off this. Again, not trying to spend too much time here. They just take the wick and then close above. I don't even want to get to consequent encouragement. I don't want to see Jack. That's a consequent encouragement. I just want to quickly see him and go. And that's exactly what they did. And then here, I said that anytime liquidity is taken and then there's an order block, you obviously have this here. This is, for me, although it did pan out in hindsight, this for me is considered a low probability order block because liquidity was taken first here before they reached back into or returned back into the order block. Then you see price just leave here, take out this buy side liquidity, and just continues higher. And then from there, as you guys can see, it wasn't high probability conditions to be trading, but I'm very proud of my performance today. Again, interest rates are cut 50 basis points, $6 yields. Yield interest rates are lower, so dollar is bearish and NASDAQ is bullish. If there's one thing that I can say is that 10 a.m. has to be studied. And if NASDAQ does not leave those prices, then that means it wants to stay talking and flirting with those opening prices, as far as what my journal says. And if you guys can see the entries here, I don't even think you guys can see it, but it's the same fractal right there. You see the bag right there, and then the small fair value gap right there, and then they continue to take price higher. So, yeah, so I took 2 W's, 3 trades in total, 1 L. This was obviously on my personal account, which I wanted to also go over this right here. The probabilities were ease 100%. And this is for the FOMC meeting date of November 2024. So they went down, 0.50 basis points. Now they're trying to ease it. The probability is a lot higher for them to ease it. It's at 100%. They're not going to keep it the same because it's 0% and the hike is at 0%. But then again, it's relatively too early. Right now we're at that 475-500. That's why it says current. And now it's just a matter of fact if we're going to go down 50 basis points, right, or 25. From 475 to 450 would be 25 basis points, which is 475 to 450. And then from 475 to 425 would be 50 basis points. So that's what's going on here. That's why it's at 100% ease, because the odds are betting for for interest rates to be cut again. So just keep in mind of that. If you guys don't know what tool this is the Fed Watch tool. This stuff was taught to me by Kish, and also I work at a institution, a financial institution. So I get to see how, you know, the Fed cutting rates plays into a role into everyone else's lives, and not just us as traders, but us as just regular consumers who are regular day-to-day people that do regular banking things and basic financial needs that we need to take care of. This affects us a lot. So me being able to see it and understand it is a good thing. So that's that. Besides that, guys, I don't have anything else to share. I'll probably make a video or touch basis more on the whole 10 a.m. opening price. I feel like I didn't cover that enough here. But I wanted to give you guys a quick illustration of what it means and how I saw it today. But I'm extremely proud of my performance today. And I feel like I'm getting back into touch with price action because it's been quite some time that I've been trying to trade on a live account. As I've said before, trading live is very different from trading paper trading, because paper trading, you give room for sloppiness because it's not real money. But when you're trading your own money, it's definitely something that you have to, just focus a lot more on. You have to focus and tune in and really try your best to not make any sort of dumb decision or stupid choice. I'm not saying to not try to make a mistake. You're going to make a mistake. That's inevitable. You're going to lose a trade. That's inevitable. But the idea that you're just not entering trades just to enter trades like you would on a paper trading account. Like with a paper trading account, I feel like most of us have that mindset where we're like, oh, I think I can see it here. I know I wouldn't enter here, but like I can look and see it going up. But so you know what? I'm going to enter. I'm going to go along. I'm going to press the button. You know what? Because I just want to see how it plays out. You wouldn't do that on a live account. It's a lot more respectable. You respect the capital and the risk a lot more. So before you go ahead and try to take a loss and pay commission cost with the loss, you're gonna think about that a lot before you want to actually press that button. So it's a very, very good experience. If you guys been trading for quite some time and you guys are kind of wondering if it's worth trading on a personal live, I think it's absolutely worth it. Not $100 account, not a little $100 trading account. It's all relative. If $100 is a lot to you and you don't make $100 on your week to week paycheck or a bi-weekly paycheck and you're in a third world country, and $100 is like your monthly wage, I would say go for it. Definitely use $100. But if you're a person who's in the U.S., anybody in the U.S. is making $100 on their paycheck, even at the age of like 17. So that being said, you should put an amount that you would consider respectable, and that you would hate losing it. So for a lot of people, that could be 1,000. For me personally, I'm gonna be honest. For me, it's like 1,000. If I am out here trading my personal live accounts and I just blow through $1,000, I'm going to kind of be upset about that. I'm not attached to the money, but it's just like, damn, $1,000. I can pay for my car note, my insurance. I can pay for my rent. So it's a good number for me to respect the capital for it. But yeah, guys, if you guys haven't traded live, I definitely recommend it. Again, an amount that's respectable for you. Besides that, though, guys, thank you so much for tuning in. I'm loving the consistency we're having here. I feel like I'm in tune, and I'm back, man. I'm back for good, too. I'm back for good. I'm tired of putting my dreams to the side and just dealing with other things outside of this. I don't care whatever comes anymore. I'm putting my whole entire faith on this and that it's going to work out, and that trading is what is going to provide the things that I'm looking for, as far as the freedom that I'm looking for in my life on a physical level. I'm a Christian, so freedom can only truly come from the Lord. But on a physical level, on earth, money is a resource that is very helpful. In fact, the Bible says in Proverbs, if you have wisdom and money, you can go very far. And so having the understanding of how the markets work, and also having the understanding of how everything else works as far as how business goes or entrepreneurship, whatever it is for you, plus money, um, you know, it allows you to be a good steward of the blessings that come your way. And so I want to challenge you guys to study 10 a.m. opening price, and also to, challenge yourself to trade live. If you haven't done a combine, go do a combine. Something that you know that you're going to respect. It definitely trains you to be better with managing the way you're trading, your emotions, and your way of controlling yourself. So yeah, that's all I have to say for this one, but I want to thank you guys for tuning in. There's a lot of gems laid all over the place. Like up, thumbs up, thumbs up, subscribe, and comment if you're new to the channel, and if you want anything to be covered. I want to start making teaching lessons during the weekends while the market is not open, just so that I can continue to be consistent. So God bless you all. Have a phenomenal weekend, and I will see you guys all possibly on Monday, and if not, I'll probably have a lecture for this weekend. But Monday through Friday, it is all review of the market, and weekends are going to be straight for lectures. So love you guys. Peace out. Thank you for watching, if you're watching, and if you made it this far. Me and you are meant to be friends. All right. God bless you all.